Alright everybody, welcome back to my stock channel. You know what time it is. It's GameStop time, GME. What the heck is going on with this thing? I just gotta know. They just announced their first profitable quarter in like forever. The stock boomed this week, up 33%. Yikesers. Let's see if this was predictable. Let's see what the books say how this went down. 45 to 40, coming back down, the high teens, shot back up to 23. I don't know. I'd kind of expect a bigger rally than that. Maybe it will continue. Let's hope it does. They jumped 10% despite third quarter earnings miss as CEO. This was December 8th. They missed earnings. GameStop shares surge as video game retailer posts surprise profit. That's right here. GameStop soars after their first quarterly profit in 2 years. I didn't know they had one 2 years ago. That's good. Company slashed its inventory levels and costs from a year earlier. GameStop plans more cost cuts earlier. I've been hearing a lot about how GameStop is changing the way their company works and kind of rearranging their entire company, but I didn't really hear how they're rearranging it exactly. Are they still running Blockbuster stores with renting video games, or are they just doing it online now? I'm not really sure. But for the quarter ended January 28th, net sales dropped slightly to $2.23 billion. Woo, they're still doing some business. From $2.25 billion, not a big drop. The video game retailer also posted a profit of $48 million, or 16 cents a share, compared with a loss of $147 million, or 49 cents a share, a year ago. Wow. What a difference. Oh, I just love the pop-ups, don't you? Quarterly income statements. Here it is. January 2023. Look at Google all over it. $2.23 billion on $48 million worth of income on $2.23 billion in revenue. Hallelujah. How do they do it? They've been getting awfully close. They've been getting so close. Well, that was 108 million. That was losing 94 million. So yeah, they really haven't been that close. Let's see how much money they have and kind of keep this in perspective. They are a monster company, and sometimes these people can lose 100 million for breakfast, and it doesn't mean much. The annual balance sheet is right side up. They look like they're of health. The debt is 1.79 billion, which is half a year's revenue. It doesn't seem as bad as almost every other company I've been looking at. They seem to almost have a year's revenue in debt, at least the ones that are on Skid Row. This one's not on Skid Row, apparently. Quarterly, could we see it's coming? No. This was a revenue beat. This thing here, the revenue went from 1.19 billion to 2.23 billion. Now, if they fell short of the estimates analysts, I guess the estimates had them up here for some reason. What in the world were the analysts seeing that would know that their revenue is going to almost double quarter over quarter? They must have read some tea leaves. Maybe we acquired somebody or did something. But yeah, profitable company. What's the analyst saying about next month? Is it coming back down here, or are they going to hold this? I believe in the analysts at this point. If they predicted this, then yeah, I like their expectations and I like their analysts. They sound like Madame Cleo. Operating expenses $500 million. They have a good balance sheet, 1.39 billion in cash. They're not going anywhere. They've been flirting around with profitability for a while. Annually speaking, yeah, no, they're still losing $300 million a year. But for this quarter, they were able to dig it out. Was this a very big dig? I would say no. Was it mostly based on the revenue? I would say yes. Is the revenue going to hold? That's the next question. Notice they had the same revenue last January. Maybe this is a Christmas season thing. Maybe this is the holidays. January. See the flanking going on here? You got a really fat January. You got a really fat January. Maybe they're more seasonal than I give them credit for. So what can we expect for the next earning report? Maybe that's it right there. Maybe this is it again. 157 million. To the negative. Last January, when they did 2.25 billion, almost the same amount, they managed to lose 147 billion. So props to them for being able to take the same amount of money and make it profitable. So that does show considerable changing in the company. Their line also got smaller. The losses per quarter evaporated slowly throughout the year from last January. So even though they were taking on less revenue, they were losing less. So maybe this was inevitable. Because of all the moving in the correct direction. I like it. I'd like to know more about the company, obviously. It should also be noted that their quarterly loss last January 147 million, next quarter 157, next quarter 108, next quarter 94, next quarter was the profit of 48. So very notably, they were obviously churning away at this operating cost or whatever it is. They've been lowering their loss. They've been coming closer and closer and closer. You could probably read the tea leaves on this one that they were getting closer. And then bang, $48 million. So hats off. They've at least fixed 1/4 of the year. So hey, and I got a feeling these smaller parts, they're going to be looking a lot better. Next April revenue line might look like this. I don't think we're going to see a negative 157 million net income next time. If anything, it's going to look closer to this one, 94 million, and it's probably going to look better than that. It seems like they really are making a concerted effort to buckle down, tighten the books, and turn this thing into a profitable company and show something to the investors who are rewarding them quite nicely, actually. Back to $23 all on their own. Let's see how much all on their own it is. Well, I guess they're still not a profitable company annually. And I know a lot of people like me will look at a quarter and multiply it times 4 and see the future. This one was a little seasonal in nature. At least they got 1/4 of the problem solved. If they can at least shrink down properly the other 3 losses, they might end up in the positive for the year. So it's very, very possible. Operating expense 452 million. Total revenue for the year 6 billion. So I mean, yeah, this is a nice sweet spot. They're not strangled by operating expenses. They're not strangled by debt. They just get to do business now, and they've got a ton of it. They just need to work on the price tags. They need to work on the finer points, and I think that's what they've been doing. I can see a profitable future for GameStop. Let's see how many shares they've got out there and how long it takes. 304 million shares outstanding. So for them to show us $1 earnings per share, they're going to need to show us $304 million in annual earnings, which means if they repeat this quarter that they just had, for instance, I know this is getting weird, but if they can repeat this 4 times, They're going to have about 200 million of that 300 million needed to be a dollar earnings per share. So are they almost there? They could very well be almost a dollar a share. Very well. They just need to continue this tightening path. They just need to get even tighter. They need to get encouraged by this. They need to go, you know what? We don't need 5 janitors. We don't need the espresso machine. Let's shut down a couple of these stores that are continual losers. If they're even doing the stores, I don't know. Or let's charge an extra 5 cents per order. They need to do something very, very tiny, and it's just going to set them right over the top. And as long as they can avoid stupid from here on out, the video game business isn't going away. Video games aren't going away. Video game rentals is superior to buying them. You save a ton of money. These games are $50 to $100 each. And you can rent them for a few bucks and play them until you're done with them and then return them. So it's a fantastic offering that they have in a needed market at the right price. I'm starting to like this one more and more. Can I see them at a dollar earnings per share? Just plugging away with, what would that be? 75 million instead of 48 million in net income. If this was a 75, if this was 75 million, can they pull that off every quarter and make a dollar earnings per share? I'd say absolutely. And I'd say if they do that, they're worth every bit of 30 bucks, maybe 40 bucks. I don't know what PE you want to assign to these people. Let's see what their growth looks like. I'm not sure it would warrant a PE. I like to give higher PEs to higher growth. Now we see a company that is getting a little bit smaller. I wouldn't give them a hyper PE. I'd say it's pretty much priced right now, where it's probably where it belongs if you were speculative about the future, maintaining the January profits and the company, tightening into a 50-cent earning per share company. That's about the price that it's being awarded right now. So is it overdone a little bit right now, considering they haven't done it yet? Maybe. What are the chances of them not doing it? I don't know, maybe 50-50 or something, that they'll come close this year, and then maybe it'll take another year, and then it'll fully be worth the $23 or $30. For them to get up to $60 or $70, they're going to need to do, $150 million in profit. And I don't know if they can pull that off. They certainly have a $6 billion a year company. Can they pull off $150 million in profit off that revenue? There's plenty of revenue there, folks. And these are rentals. Stop it, dog. Jeez. Making a video over here. You're interrupting. Sorry, everybody. I got kitty cat doggy wars going on. Revenue $6 billion. Yeah. I could see this being $150 million a quarter earner. That's certainly within their revenue capacity. So yeah, I'd say my high on this one, $60 in 2 years. That would be my highest cap that I would anticipate seeing this one at. $20 is the bottom I'll give it. It's not worth anything less than 20, I don't think. This price is definitely warranted. And I think that if you're going to hold it for a couple of years, I think it may very well be worth 60 when we find out how much they can really irk out in profits, because their operating cost is low compared to that, compared to the revenue, and they're in the rental business, so they should be able to, buy one game for $100 and have that game generate $1,000 in sales. They should be able to rent them over and over and over again. Yeah, good job. All right, GameStop. Thank you, everybody, for tuning into my stock channel. I'll bring you more updates if we get any new news. I'm James. Please subscribe to my channel. I'll bring you more updates on GameStop. and news as we have it. And please subscribe and have a wonderful afternoon. See you next time.